As some of you may remember, and some of you probably have chosen to forget because it doesn't fit into your investing bias, but my theory for a long time now has been that the stock market would probably be the first asset class to enter a bubble phase. Of course, I was wrong on that. The first asset class to enter a bubble phase has been Bitcoin. But that notwithstanding, I do think the stock market is going to follow Bitcoin into a bubble. And my theory for pretty much all of 2017 was that most of the liquidity would probably tend to focus in the stock market to the extent that the commodity markets kind of get ignored. And so I've got a chart here, the S&P, and you can see here we're doing pretty much exactly as I had expected. Clearly there's lots of liquidity flowing into the stock market. It's got a nice strong trend going from the lower left to the upper right, and there's no indication at this time anyway that that trend is done, and I don't think the trend's going to be done until we turn and go parabolic like Bitcoin has done. The next chart is the CRB, the commodity index, and you can see this has done just exactly as I predicted. We had a very nice, very powerful rally out of the 3-year cycle low back here in 2016, but once that rally peaked, we've just done nothing but go sideways for the next year and a half. This is the chart of the mining stocks, and even more apparent in this chart, you get our in gold. It's not a 3-year cycle low; it's an 8-year cycle low. But we get our 8-year cycle low in the metal sector, and then we get the baby bull rally in the gold mining stocks, and boy, what a rally it was! Almost 200% during this baby bull. And I'm going to show you another chart here in just a second, and I think you'll see why this is what has followed. Just a frustrating sideways go nowhere market that has just wasted basically all of 2017. And here's the culprit, in my opinion. As the mining stocks rallied out of that baby bull bottom, the bullish percent index, which measures the percentage of stocks in the index that are on buy signals on their point and figure charts, that reached a maximum of 100 at the top of that baby bull rally. I don't believe this has ever, and this, by the way, this is not a sentiment indicator. This is an overbought, oversold oscillator. And I don't think this oscillator has ever tagged 100 before, not to my knowledge anyway. So this baby bull rally was the most overbought market in the mining stocks that maybe in history. And the rubber band theory applies to this market just like it does any other market. And when you get a market that gets this overbought, it's going to take a while for sentiment to cool off from these kind of overbought readings, and you can see that's exactly what has happened. We've come down after the election. We put in our bottom, but then we just haven't gone anywhere in 2017. We just churned sideways, and based on this kind of overbought reading right here, I guess maybe we shouldn't be so surprised that this is happening. The next chart here is the energy stocks, again, another component of the CRB, which has been going sideways. And you can see the energy stocks very similar to the mining stocks, just a very powerful baby bull rally. But then 2017 started, and we have just gone nowhere. The same, pretty much the same chart as the metal sector, the mining stocks. And when I switch over to the bullish percent chart, you can see those same extreme overbought readings at these tops. And so now we are just stuck in this sideways churning pattern. And the CRB, we're coming up on 2 years in this 3-year cycle. The 3-year cycle low here occurred in early in the year in 2016. So once we get into January, February of 2018, we're going to be 2 years into this 3-year cycle. The oil market is very late in its intermediate cycle, so and oil is the biggest driver of this commodity index. So there's probably not a lot of upside left here in the CRB before we get another corrective move back down. I don't believe it's going to be quite as deep as this one, but we're probably going to get another at least 1 or 2 month corrective move that erases 38 to 50% of this rally. So that's going to chew up some more of this 3-year cycle without any significant breakout. And the later we get into this 3-year cycle, the more the odds diminish that we're going to get a big sustained breakout above this top. So the way this is looking right now, I'm expecting the stock market is, if it's going to give us a parabolic move, right now we're just in a vertical market, but if the vertical market is going to turn and become parabolic, it's going to do it probably in the first half of 2018. And if that happens, it's just going to draw more liquidity away from the commodity sector, and it's probably going to prevent the CRB from really getting any kind of major breakout above this level during this 3-year cycle. And then if we do get a parabolic move in stocks in 2018, and then you would think at some point the parabola would burst, the bubble would burst, and then we would crash. And if that were to occur, I would think it would also pull the commodity index down with it. And so 2019 might be a very poor year, and not only in the stock market, assuming that we do get the vertical market turns into a parabolic market. Assuming that, then 2019 could be a very poor year for both stocks and most of the commodities, as the CRB is going to be due for its next 3-year cycle low in early 2019. So something to think about if you are stubbornly focused on the commodity markets. They're just stuck in this trading range, and it's getting late enough in the 3-year cycle to where the odds are starting to diminish that we're going to get any kind of significant breakout above this. My suggestion, which has been the same for over a year now, is to focus on the stock market for now, and we'll come back and focus more aggressively in the commodity markets at a later date, preferably once the stock market completes a parabolic move and then the bubble pops. That's my preferred scenario. Although, as I've noted in one of my other videos, it is possible that the stock market is starting a multi-year, multi-decade secular bull market, and we aren't going to reach a top in that bull market for another 10 or 15 years. However, also, as I have pointed out, that's not my preferred scenario, because I don't believe that years of central bank QE should be rewarded with a multi-decade bull market. I think it should result in another series of bubbles. So my expectation at this point is that the vertical move in stocks will turn parabolic next year, but it's still too early for me to say whether or not my preferred scenario is going to play out, or whether I will be wrong and we actually are starting a multi-decade secular bull market.